Hello investors. Welcome back to our YouTube channel. I'm Infographics. Today, we'll discuss Apollo Micro Systems Ltd, AMS, a company in India's booming defense and aerospace sectors. From financial performance to growth potential, we'll explore whether AMS is a strong pick for long-term investment. Let's dive in. 1. Company overview and industry position. Founded in 1985, AMS is a top player in defense electronics, providing critical systems for missiles, aircraft, and space programs. India's recent defense focus has unlocked substantial opportunities for companies like AMS. With consistent orders from the Ministry of Defense and partners like ISRO, AMS stands poised to benefit from India's defense expansion. 2. Financial performance and growth potential. In 2023, AMS revenue rose by 24.91% to 3.72 billion rupees, with net income up 65.97% at 311.19 million rupees. As of the last quarter ending in June 2024, they reported a notable 58.09% year-over-year revenue growth, reflecting high demand from government contracts. The company's latest market cap is approximately 31.3 billion rupees with a PE ratio of 63.13, reflecting its growth-heavy profile. 3. Recent developments. AMS has been on a winning streak, securing multiple contracts totaling 77 crores rupees recently, including deals with Bharat Electronics Limited and the Indian Navy. These consistent orders not only boost revenue but also indicate AMS's trusted position in the defense supply chain. 4. Valuation metrics. AMS is currently trading at 100 rupees with a 52-week range between 74 rupees and 50 paise and 161 rupees and 70 paise. The company's high PE ratio of 63.13 aligns with its growth trajectory, though investors should weigh this against industry standards. The low dividend yield of 0.05% indicates a focus on reinvestment rather than payouts, ideal for growth-oriented investors. 5. Intrinsic value analysis. To understand if Apollo Micro Systems Ltd is undervalued or overvalued, let's look at its intrinsic value. This metric is crucial in determining whether the stock price aligns with its true worth based on cash flows and growth potential. Using a discounted cash flow (DCF) analysis, which estimates future cash flows and discounts them back to their present value, we find that AMS's intrinsic value per share comes out close to 166 rupees and 64 paise, currently trading at around 100 rupees. For long-term investors, we are diving into the intrinsic value of a fascinating stock, Apollo Micro Systems. Let's see if it's worth more than the current price of 100 rupees. Intrinsic value helps us reveal a stock's true worth, and I'll break it down for you step by step. Let's jump in. To calculate a more accurate intrinsic value for Apollo Micro Systems based on its current price of 100 rupees, let's go through the discounted cash flow (DCF) method using more realistic assumptions. Here's how we could reach that value. Step-by-step calculation of intrinsic value. 1. Estimate future cash flows. Assume Apollo Micro Systems generates 20 crores rupees annually in free cash flow. Let's assume it grows at an estimated growth rate of 15% annually, given that higher growth assumptions can lead to a higher intrinsic value. Projected cash flows, assuming 15% growth per year. Year 1, 20 rupees multiplied by 1.15 is equal to 23 crores rupees. Year 2, 23 rupees multiplied by 1.15 is equal to 26.45 crores rupees. Year 3, 26 rupees and 45 paise multiplied by 1.15 is equal to 30.42 crores rupees. Year 4, 30 rupees and 42 paise multiplied by 1.15 is equal to 34.98 crores rupees. Year 5, 34 rupees and 98 paise multiplied by 1.15 is equal to 40.23 crores rupees. 2. Discounting cash flows to present value. Use a discount rate of 12%, which factors in Indian market risk and inflation. Discounted cash flows for each year. Year 1, 23 rupees divided by 1.12 to the power of 1 is equal to 20.54 crores rupees. Year 2, 26 rupees and 45 paise divided by 1.12 to the power of 2 is equal to 21.06 crores rupees. Year 3, 30 rupees and 42 paise divided by 1.12 to the power of 3 is equal to 21.66 crores rupees. Year 4, 34 rupees and 98 paise divided by 1.12 to the power of 4 is equal to 22.35 crores rupees. Year 5, 40 rupees and 23 paise divided by 1.12 to the power of 5 is equal to 22.73 crores rupees. 3. Calculate the terminal value. To represent the value beyond year 5, we calculate the terminal value assuming a long-term growth rate of 3%. Formula for terminal value. Terminal value is calculated by 5-year cash flow multiplied by 1 plus long-term growth rate divided by discount rate long-term growth rate. Terminal value calculation. 40.23 multiplied by 1 plus 0.03 divided by 0.1 to 0.03 gives 460.36 crores rupees. Discount the terminal value to present value. 460.36 divided by 1.12 to the power of 5 is 261.15 crores rupees. Sum of discounted cash flows and discounted terminal value. Intrinsic value is equal to sum of discounted cash flows plus discounted terminal value is equal to 20 rupees and 54 paise plus 21 rupees and 6 paise plus 21 rupees and 66 paise plus 22 rupees and 35 paise plus 22 rupees and 73 paise plus 261 rupees and 15 paise is equal to 369.49 crores rupees. Intrinsic value per share. If the company has, for example, 2.22 crore outstanding shares, the intrinsic value per share would be 369.49 crores rupees divided by 2.22 crores is equal to 166 rupees and 47 paise. Thus, the intrinsic value per share for Apollo Micro Systems would be approximately 166 rupees and 47 paise. Based on this data, here's a quick breakdown of each value for Apollo Micro Systems Ltd to clarify what each means. Current price, 100 rupees. This is the market price per share, what it's currently trading at. Intrinsic value, 166 rupees and 64 paise. Calculated using the discounted cash flow, DCF, method with estimated growth and discount rates, this value reflects the underlying worth of the stock based on projected future cash flows. With an intrinsic value higher than the current price, the stock may be considered undervalued. DCF value, 7 rupees and 54 paise. This figure likely represents the value of cash flows discounted without considering terminal value. It may appear low if only near-term cash flows are used, or if growth rates and discount rates are set conservatively. This alone might not represent the full value of the stock. Relative value, base case 325 rupees and 75 paise. Calculated through relative valuation, such as using PE, EV/EBITDA ratios of similar companies, this suggests Apollo Micro Systems could be priced even higher based on industry peers under a base case. The large gap from the current price shows potential upside, depending on its market positioning. This range provides valuable perspectives. The intrinsic value suggests a slight undervaluation, while the relative value points to significant growth potential based on peer comparisons. It's always essential to combine DCF with other valuation methods, as each offers insights that support a more balanced investment decision. 6. Risks and competitive landscape. Apollo faces risks typical in defense sectors, such as reliance on government contracts and foreign competition in high-tech defense. Yet, AMS's agility and niche expertise help it secure contracts where larger players, like Bharat Electronics, may not specialize. 7. Is AMS a buy for the long term? AMS's future looks promising, backed by government policies and expanding revenue. If you are a long-term investor open to moderate risk in exchange for high growth potential, AMS could be an ideal addition to your portfolio. Outro. That's all for our analysis on Apollo Micro Systems Ltd. What do you think? Share your thoughts, and if you enjoyed this content, share and stay tuned for more investment insights. Happy investing!